This is James, and you're watching Tixee Live. In fact, you're watching a very special episode of Tixee Live because today, this program is called #Ask James, and it's pure education. But anyway, before we get started on this new series or this new episode, the very first episode of this new series of #Ask James, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started on the very first episode of #Ask James. Now, with this series, I rely on you guys. I need you guys to send in a topic, whatever you choose, and we'll dedicate a video discuss that topic and just that topic in particular. This week, or this episode today, big thanks to SMF 790. They sent in their suggestion, and today's suggestion, what we're going to discuss, is explaining market jargon. Explaining market jargon. Hey, yes, thanks again. This is your topic today. So explaining market jargon, because like I say, like any industry, there's always a secret language. No matter what industry you're in, there's always a secret language. Today, we're going to focus on some key words in this industry and explain to you what they actually mean in plain English. Let's start off with the animal kingdom of the markets, because we talk a lot of animals when we discuss about the markets. So let's start off with, of course, bulls and bears. Now, bulls and bears, okay, are the two main things you will hear a lot in the industry. Bulls are investors who are optimistic and believes the market or an asset will go up in price, okay? Bears are investors who are pessimistic and believes the market or asset will fall. So bullish, when somebody says I'm bullish, they believe the market's going to go up. And when they say they're bearish, they believe that the market will start to fall or an asset will start to fall. And then there's hawks and doves. Hawks and doves. And again, I do say this a lot when I'm talking about the market, especially when I'm talking about the Fed, the ECB, and the Bank of England. Now, hawk and doves, okay, they're terms used to describe the actions and attitudes of central bankers in relation to decisions with interest rates, okay? Hawks, because hawk is a predatory bird, okay, are aggressive and they want to raise interest rates, okay? Doves are cautious and they may act to decrease interest rates. When I say hawkish, it's aggressive in their speech or in written words, okay? When I say dovish, it means they're cautious in their speech and they talk about their concerns in the economy. Okay, now more animals. A black swan event. A black swan event is an unpredictable event which can affect the market in a severe way. I give you a perfect example, COVID-19. Now, a dead cat bounce, that's a temporary recovery in an asset's price when it's steadily been falling. So say, for example, you have the S&P, which is on a downward trend, okay, so heading downwards, and it suddenly bounces up for a little bit and then starts going back down again. That's called a dead cat bounce. So those are some of the animals of the industry. Okay, some of the animals of the industry. Go long, go short. That's another expression which is used a lot. Basically, long means buy and short means sell. So say, for example, if I believe or say I'm bullish about gold, I believe gold was going up, I can say I'm long on gold, or I'm going to long gold. If I'm bearish or nervous about the euro, which I am, I would say I'm short on the euro, or I'm shorting the euro. Okay, shorting the euro. So long means buy, short means sell. Bid and ask, and I'll pull up my chart for this to help you with this next bit. Bid and ask, okay? Bid is the price where the asset is selling at, and ask is the price where you can buy an asset at. So say, for example, if we have a look here, got the ask, this is where the euro is being bought at, and the bid, this is the price the euro is being sold at, okay? Bid and ask. The spread, which is the next thing, okay, is the difference between the two of them, the difference between the two. So if you look here, for example, this is gold. There's a difference at the moment of 8 cents between them. 8 cents. Okay, so that's the spread, difference between the ask and the bid price. Next up, support and resistance. Support and resistance. Now, support, okay, that acts like a trampoline. Okay, in other words, an asset will come down, touches the support, and then the market will rush back in and start buying again. So it pushes it back up. And then resistance acts like a ceiling, where an asset will rise to, suddenly hit, and the market will start selling it from. Okay, selling it from. So say, for example, we have a look at gold again. Okay, this level here I put in is acting as a support, current support at the moment. As you can see, every time it's touched that level, the market started to buy in again. It's happened a few times. And here is acting like a potential resistance, 1,791. Every time gold is trying to reach that point, the market has started to sell it from. Okay, sell it from. Now, technical indicators. Now, these are mathematical calculations of historic asset prices, okay, that traders use to try and find the support, resistance, and to see when the direction of the market may change. Now, of course, we'll do a whole new video on that in the future, so don't worry about that. We'll do a whole video on that just for technical indicators. Here's some example of technical indicators. We have Bollinger Bands here, and we have simple moving averages, okay? These are technical indicators, all right? So there we go. That's that side of it. Now, the other side of it, of course, where's my mouse gone? Here it is. The other side of it, of course, is fundamental analysis. Fundamental analysis is a different type of study. Now, this basically tries to determine a stock or asset's real value, such as using economic indicators to try and establish the real value of a currency against another currency, okay? Or earnings to see how valuable a company potentially is. Okay, so that is fundamental analysis. Again, we'll dedicate a video just to that at some point. Okay, other things, a FIC market. A FIC market, when there's lots of traders in the market, a lot of activity. FIC market is the opposite. Not many traders and not much activity. Hedging. Hedging is another thing which is used a lot. This is when somebody tries to protect their positions by maybe trading a different asset. For example, if I was trading the guppy, the British pound, Japanese yen, I may hedge my trade by also trading the euro, sterling, etc. So that's hedging. Fat finger. I love some of these sayings. A fat finger, okay, is when basically a human error has happened, like pressing an order, okay, and maybe actually adding an extra digit, and it causes the market to crash. So say, for example, if I was trying to say buy a $1 million dollar, by accidentally put a billion $1 trade in, the market could react and could crash. A flash crash. This is when you have a rapid and deep and volatile fall in assets price in a short period of time before recovering back, caused by a trade executed by a black box solution. In other words, a computer program. Okay, computer program. These names are funny. Oh, you have no idea. These are only a few names as well. There's so many, like abandoned baby, that's a candlestick pattern, or three white soldiers, falling star. Again, I'll be doing that when I do candlesticks next week. So that's another one. So there's many, many more names. And finally, nicknames for currencies. There's quite a few here, so we'll go through them together. Okay, the euro is simply the euro US dollar. The cable is the British pound US dollar because of the cable which runs between the Atlantic Ocean connecting the US and the UK. The loonie, the dollar cat, okay? That's because the loonie is their national bird. The yen, the dollar yen. Yellow metal, okay, well, I'll change this so we can see it, yeah. Oops, a daisy, wrong one. Yeah, the yellow metal, which is gold. The guppy, British pound, Japanese yen. The Aussie dollar, US dollar. The kiwi, okay, which is obviously New Zealand dollar, US dollar. Single currency is another name used for the euro. The greenback, a name used for the US dollar. The sterling, a name used for the British pound. The yuppie, the euro yen. The channel, euro sterling. The Swissy, which is the Swiss franc. The majors are popular currency pairs, and the exotics, not so popular currency pairs. Let me give you an example of some of those. Give me a second. Okay. Give me a second. Right, okay, so we have a look here. Okay, go to the top. Let me pull this. Okay, hang on, let me see if you can see it. Hopefully you can see it. This is on my screen. Unfortunately, you can't see it for some reason. It's not showing. So anyway, I apologize. Majors anyway is like the euro, sterling, for example, Aussie dollar, Japanese yen, dollar yen, etc. Exotics are stuff like the Mexican peso, things of that nature. So those are not so popular. Okay, so anyway, those are some of the market jargon to start off with. Don't forget, of course, you can ask me questions anytime you wish. Any other words you want to know, or what does this mean? Or why, for example, bears are called bears? Why balls are called balls? You know, that sort of thing. Well, to tell you, the reason why they're called bears, because bears attack like that, and balls attack like that. So that's why they're called balls and bears. Okay. Don't forget to send in your topic suggestion as well. Whatever topic you want me to do next time. And I will do a dedicated special video for that. And if there is no questions, okay, if there is no questions, apart from the fact that if there is a fact that these names are funny, yes, they are. If there's no questions, don't forget, you can put it in the comment section on either Facebook or YouTube, and I will save them and I will reply to them next time I'm online. Okay, all right. If there is no questions, I hope you enjoyed the very first episode of hashtag Ask James. Please send in your suggestions for whatever topics you want me to do next. Next week, I'm going to be doing a topic on candlesticks sent in by an individual called Jay Davis. So bear that in mind. Okay, well, if you've been watching this little video on Facebook and you enjoyed it, give us a follow. If you're watching me on YouTube, and thank you very much. You're welcome. Thank you for the suggestion. I really appreciate it. Really appreciate your suggestion. Like I say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever ever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.